Welcome all. Happy to meet again with a video lecture on company analysis. Company analysis, also called as fundamental analysis, examines a firm's financial conditions, product and services, and the competitive strategy. Typically, this allows us to better identify how an organization responds to external threats and opportunities. It contains basic information about the business and its underlying characteristics. Elements of company analysis. A firm's product and services, along with its financial condition and the competitive strategies, are all covered when conducting a thorough company analysis, which generally includes the following elements: industry characteristics, involving digging further into the stage of a firm's life cycle, the intensity of competition, as well as the barriers to entry and exit. Don't forget that you also need to figure out whether the industry is fragmented or concentrated. Besides, you should also look at the brand loyalty and the customer switching cost. Can the company differentiate its product, or should its strategy be based on lowering its production cost? Make sure you find that out. External factors such as technology disruptions and the regular concerns are also part of this stage. Product demand. It is considered as the demand of the company's products. We identify the different sources of demand and the outlook of a firm's existing and the future products. Product supply covers the supply aspect of the product delivery. Here, you focus on the industry capacity and its prospects. What's the industry competition? Are there any substitute products? These are some of the questions you need to work on. Corporate profile. It outlines the firm's main products or services and maps those that generate the most revenues. An important part of this initial step is to examine the governance of the entity, including the factors such as board, its organization, composition, anti-takeover provisions. Then we need to find the company's position on the experience curve. As we know, the cost of production of a good or services declines with cumulative output. Economies of cycle, remember it? The pricing environment has to do with analyzing the input costs and the selling prices. Basically, you are expected to play out a scenario of rising cost and their demand on a company's profitability. When it comes to the selling prices, though, an analyst is to carefully evaluate the future demand and the price sensitivity. Financial ratios and the measures review the firm's financial ratios. In large, you run through the activity ratio, liquidity ratio, solvency ratio, and the profitability metrics. To do these tasks and project a company's fundamentals, analysts usually implement spreadsheet modeling. Steps in the company analysis process. Identify the company and the industry's economic characteristics. Identify and know about the products and or about the services. Understand the risks and concerns about the company. And finally, analyze the financial statements. The first one, identify the company and the industry's economic characteristics. We need to start off by knowing about the company and the industry it operates in. Suppose we want to invest in a company called Dauber, right? Go to the website web.stockedge.com. Here, type the name of the company and go to the show profile section in the Stockedge app. Also, we will get the details of the company in the about section of the company's website. Here, we will get a brief idea of the past as well as the present situation of the company, the places and the number of manufacturing facility the company operates, and also some briefs about the sector. Here it is FMCG. This step will help us in getting an idea as to which part of the value chain does the company fits in and its closest competitors which might be operating in that area. The second one is to identify and know about the products and or its services. After getting to know the overview of the company, we need to go through its products and services which it offers to its customers. For that, we can again visit the Show Profile section in the Stock Edge app, or we can visit the Products section on the company's website. Suppose we want to know about the products of Dabur. Dabur manufactures and what it sells. We can just log on to the website, and under the product section we will see the verticals it is present in, like healthcare, home and personal care, followed by the food categories. We have to also look at the nature of the product being offered by the firm, uniqueness of the product, the demand and the supply dynamics, brand awareness in the geography area it is present in, the market shares and to which market by the geography it caters to. For example, we can speak about IRCTC, again in the same website page, web.stockedge.com. It is the only company that offers a platform to book online railway tickets for travelers. There is no competitor for this type of service in India, which is a big positive for the company. Whereas taking on any auto company such as Maruti Suzuki, which offers cars of various segment to its customers. Herein, there are a lot of players and the company has to fight to retain its market share. This is how we analyze the products or services offered by the company. The third one is understanding the risk and concerns about the company. Every business and industry carries its own set of risk and concerns, which might impact the performance and profitability of the company. So, as an investor, it is very important to get an idea as to the risk the company is exposed to in case of any eventualities. For example, crude oil is an important component in the manufacturing of paints, which constitutes around 55% of the raw materials. So, the fluctuations in the crude prices will likely impact the EBITDA. So, the EBITDA margin is also getting affected. The margin of the manufacturing of paints will also get affected. So, we need to check and analyze to which extent will that particular risk affect the business and can the company overcome it. For example, currency volatility is an important risk for the IT industry as it generates the majority of the revenue from other countries. Here, we need to check that how and to what extent will the currency appreciation or depreciation impact the company's performance. The company's annual report also contains the risk and concerns that the company is exposed to. The fourth one is analyzing the financial statements. This is one of the most important steps in the process to analyze a company. The financial statement gives us the actual quantitative picture of any company, which is in an important part. When evaluating the income statements, we should check on the margins, the top lines and the bottom line. To do it the least possible time, you can check the fundamentals using again the app Stockage to get a visual idea on the trend of the revenues, the EBITDA as well as the PAT growth of the company. PAT is profit after taxes. From the balance sheet, we get an idea as to how strong the company financially is. Cash flow statements gives us a thorough picture of the cash balance which is generated from the company's operating, investing and the financial activities. It helps in understanding the firm's liquidity position also. Thank you. Hope the session was informative.